People think the Rothschilds got rich by picking winners. Wrong. They got rich by making sure there were no losers they didn't finance. When Napoleon fought Wellington, when Austria clashed with France, when every European power went to war between 1810 and 1914, the Rothschild family sat upstream of the battlefield. They didn't bet on outcomes. They engineered a system where outcomes became irrelevant. This wasn't luck. This wasn't banking genius in the traditional sense. This was structural architecture. Meyer Amschel Rothschild placed 5 sons in 5 cities: Frankfurt, London, Paris, Vienna, and Naples. Each son ran a bank. Each bank financed different government. When war broke out, the Rothschilds financed both sides. When one government won, the Rothschilds collected. When one government lost, the Rothschilds still collected. The family didn't need to predict the future. They owned the payment infrastructure of the present. The distinction matters. Wealth comes from assets. Power comes from controlling the bottlenecks through which all assets must flow. The Rothschilds built the bottleneck. Every sovereign needed money to wage war. Every sovereign came to them. The 5-house network meant the family held leverage, regardless of which king sat on which throne after the smoke cleared. Welcome to Noob Historian. We follow the money, trace the power, and expose the history they never taught you in school. You think modern banks are too big to fail? The Rothschilds invented too big to fail. In 1825, the Bank of England nearly collapsed. Nathan Rothschild in London injected gold. The British government survived. By 1830, every major European sovereign debt issuance went through a Rothschild house. Your government still borrows the same way today. Bearer bonds, secondary markets, yield-based pricing. The Rothschilds built the machinery. We still run on it. Mayer Amschel Rothschild died in 1812. Before he died, he wrote a partnership deed. The deed divided his banking empire among his 5 sons. The division wasn't random, it was surgical. Amschel Meyer took Frankfurt, the family headquarters. The central node? Salomon Meyer took Vienna, the seat of the Habsburg Empire. Nathan Meyer took London, the emerging financial capital of the world. Karl Meyer took Naples, the gateway to southern Europe and Mediterranean trade. James Meyer took Paris, the political heart of continental power. The Rothschild Archive in London holds the original 1810 partnership agreement. The document specifies coordination protocols. The 5 brothers operated as one firm, not 5 separate entities. Profits pooled centrally. Losses distributed equally. Information flowed between houses daily. Couriers crossed borders carrying market intelligence, bond prices, and political updates. Niall Ferguson spent years in the Rothschild archive. His 2-volume work, The House of Rothschild, Money's Profits, 1798-1848, and The World's Banker, 1849 to 1999, remains the definitive academic source. Ferguson examined millions of documents, letters, ledgers, bond subscriptions, loan agreements. His conclusion: for most of the century between 1815 and 1914, the Rothschild partnership was easily the biggest bank in the world. The partnership structure created 3 strategic advantages. First, geographic diversification. If France collapsed, Austria still paid. If Austria lost a war, Britain still honored bonds. The family held claims across every major European power. Political risk evaporated. Second, informational asymmetry. The 5 houses shared intelligence faster than any government. Carrier pigeons, dedicated couriers and coded messages moved news across Europe before official diplomatic channels. The family knew war outcomes, treaty terms, and market shifts before kings did. Third, systemic indispensability. No single government possessed the fiscal capacity to wage prolonged war without external financing. The Rothschilds became the lender. Once embedded, extraction became automatic. Governments repaid loans through tax revenue. The family stood upstream of taxation itself. Mayer Amschel's genius wasn't financial innovation. It was structural positioning. He placed his sons at the pressure points of European power. He built a network no sovereign could bypass and no competitor could replicate. Each city represented a different node of power. Each brother specialized in a different sovereign relationship. The network functioned because the nodes didn't compete, they coordinated. Frankfurt served as the operational center. Amschel Meyer, the eldest, managed internal governance. The Frankfurt house held the master ledger. All profit calculations, capital allocations, and strategic decisions routed through Frankfurt. The city itself sat at the crossroads of German trade routes. The Rothschilds financed the German princes, the Free City of Frankfurt, and the Austrian military operations along the Rhine. London became the financial engine. Nathan Mayer Rothschild arrived in Manchester in 1798 as a textile trader. By 1811, he moved to London and focused on finance. He built relationships with the British Treasury. During the Napoleonic Wars, the British government needed to transfer gold to Wellington's army in Spain and Portugal. Traditional methods failed. Nathan moved the gold through his family network, bypassing French blockades. The British government noticed. From 1815 onward, Nathan became the primary underwriter of British sovereign debt. Paris represented political proximity. James Mayer Rothschild moved to Paris in 1812. After Napoleon's defeat, the restored Bourbon monarchy needed to stabilize French finances. James arranged loans. He financed the French government's war indemnities to the Allied powers. He underwrote French infrastructure projects, canals, railroads, and mining operations. By 1830, James held more influence over French fiscal policy than most cabinet ministers. Vienna controlled Central European politics. Salomon Mayer Rothschild operated from the Habsburg capital. The Austrian Empire fought constant wars against Napoleon, against Italian nationalists, against Hungarian independence movements. War costs drained the treasury. Salomon financed Austria's military expenditures. He also funded Austrian industrial development, including the Kaiser Ferdinand Nordbahn, the first major railroad in the empire. The Habsburgs became financially dependent on Rothschild credit. Naples provided the southern anchor. Karl Mayer Rothschild established the Naples House in 1821. The Kingdom of the Two Sicilies needed loans to suppress internal uprisings and modernize its military. Karl financed the monarchy. He also controlled the Sicilian sulfur trade, a critical input for gunpowder production. The Naples House gave the Rothschilds leverage over Mediterranean commerce and southern European politics. The five-city net information moved slowly in the 19th century. Diplomatic dispatches traveled by horseback. Official news took days or weeks to cross borders. The Rothschilds built a private communications network faster than any government possessed. The family employed dedicated couriers. These messengers carried letters between the five houses. The couriers traveled preset routes, switching horses at Rothschild-controlled waypoints. The letters used codes. The brothers developed cipher systems to obscure sensitive content. Even if a courier was intercepted, the message remained unreadable. The family also used carrier pigeons. Pigeons flew between London and Paris, between Paris and Frankfurt, between Frankfurt and Vienna. A pigeon carried news of battle outcomes, treaty signings, and market movements hours before official channels. The most famous example occurred at Waterloo in 1815. Napoleon faced Wellington and Blucher near Brussels on June 18th. The battle's outcome would determine Europe's political future. Nathan Rothschild stationed an agent, Rothworth, near the battlefield. When Napoleon lost, Rothworth rode to the coast, crossed the English Channel, and reached Nathan in London on June 20th. The official British government dispatch arrived on June 21st. Nathan knew the outcome before the British Treasury did. He used the information edge to trade government bonds. The exact details remain disputed. The popular legend claims Nathan pretended Napoleon won, sold bonds to trigger panic, then bought bonds at depressed prices before the truth emerged. Ferguson's archival research suggests a different sequence. Nathan bought bonds immediately upon learning of Napoleon's defeat, anticipating the price surge when the news became public. Either way, Nathan profited from informational asymmetry. The Rothschild communication network provided a sustained competitive advantage. When revolutions broke out in 1848 across Europe, the brothers knew which governments faced collapse and which would stabilize. They adjusted bond positions accordingly. When wars erupted between Austria and France in 1859, the family tracked troop movements and battle results faster than the combatants' own generals received updates. Governments noticed the information gap. Austrian Chancellor Metternich routinely consulted Salomon Rothschild for intelligence on French politics. The British Foreign Office asked Nathan for updates on continental affairs. The family's couriers and pigeons became a de facto intelligence service. This informational dominance wasn't accidental. Mayor Amschel designed it into the partnership structure. The 1810 deed required daily correspondence between brothers. The communication protocols ensured the family operated with a shared information base no outsider could access. By the 1820s, the Rothschild information network extended beyond Europe. The family placed agents in New York, Rio de Janeiro, and Calcutta. These agents reported on commodity prices, political developments, and trade flows. The intelligence fed back to the five European houses, enabling the family to arbitrage global markets. The modern equivalent is high-frequency trading firms. These firms invest billions in fiber optic cables and microwave towers to shave milliseconds off data transmission times. The speed advantage generates profit. The Rothschilds pioneered the same logic with pigeons and couriers. Speed equals edge equals extraction. Neutrality wasn't a moral stance, it was a profit model. When European powers went to war, the Rothschilds financed multiple combatants. The family didn't choose sides. They provided credit to whoever needed it and paid interest. The logic was simple. Wars cost money. Governments tax their populations to pay for wars. Taxation has limits. Beyond a certain point, higher taxes trigger rebellion or economic collapse. Governments borrow instead. They issue bonds. Bondholders receive interest payments funded by future tax revenue. The Rothschilds underwrote the bonds. They bought sovereign debt at issuance, then resold the bonds to investors across Europe. The family earned underwriting fees, interest on bonds they retained, and trading profits from secondary market transactions. The five-house structure made simultaneous financing feasible. Nathan in London financed Britain. James in Paris financed France. Salomon in Vienna financed Austria. The brothers didn't compete. They coordinated. When Britain fought France, both governments borrowed from Rothschilds. When Austria fought France, both sides used Rothschild credit. The 1820s offer a clear example. Spain's monarchy faced liberal uprisings. France intervened militarily in 1823 to restore King Ferdinand VII. The French government borrowed money from James Rothschild in Paris to fund the invasion. The Spanish monarchy borrowed money from the Rothschilds to pay for its own defense and post-war stabilization. Both sides paid interest to the same family. Another case, the Greek War of Independence, 1821-1829. Greece fought the Ottoman Empire for independence. European powers backed different sides. Russia supported Greece. Britain and France eventually joined. Austria stayed neutral but financially supported the Ottoman Empire. The Rothschilds financed loans to the Greek provisional government and underwrote bonds for the Ottoman Empire's European creditors. Whichever side won, the Rothschilds collected. The Crimean War, 1853-1856, demonstrated the model at scale. Russia fought an alliance of Britain, France, and the Ottoman Empire. The war dragged on for 3 years, draining all combatants' treasuries. James Rothschild in Paris arranged loans for the French government. Nathan's successors in London, Nathan died in 1836, financed British war expenditures. The family didn't finance Russia directly because Russia operated outside the Western European bond market structure. Still, the Rothschilds profited from both Britain and France's borrowing. This simultaneous financing created a perverse incentive. The longer wars lasted, the more governments borrowed. The more they borrowed, the more interest the Rothschilds collected. The family didn't start wars, but they benefited from prolonged conflicts. Critics accused the Rothschilds of war profiteering. The accusation was correct. The family extracted wealth from violence. The structure guaranteed it. Neutrality eliminated the risk of backing the losing side. Diversification across 5 capitals eliminated the risk of any single sovereign default destroying the family's balance sheet. The family defended their position with a different argument. They claimed their financing enabled smaller powers to resist larger aggressors. By providing credit to Austria, they prevented French dominance. By financing Britain, they contained Russian expansion. The Rothschilds positioned themselves as balancers of European power. The truth lies somewhere between. The family profited from war. They also stabilized the European state system by ensuring no single hegemon could monopolize credit. The five-house network created a financial equilibrium where every power had access to capital, and no power could financially starve its rivals. The modern parallel is arms sales. Lockheed Martin sells F-35 fighters to the United States, Israel, and Saudi Arabia. Boeing sells weapons to NATO and Gulf states. Defense contractors profit regardless of who fights whom. The Rothschilds were the 19th century version, war financiers who prospered from conflict itself, not from any particular outcome. Waterloo wasn't the first war the Rothschilds financed. It was the war where their informational and structural advantages converged to maximum effect. By 1815, Napoleon had escaped from Elba. He returned to France, rallied his army, and marched toward Belgium. Britain, Prussia, Austria, and Russia reformed their coalition. The Allied powers needed money to mobilize. Nathan Rothschild in London became the primary channel. The British government faced a logistical nightmare. Wellington's army sat in Belgium. British gold sat in London. Moving gold across the English Channel and into Wellington's war chest required bypassing Napoleonic forces and navigating hostile territory. Traditional banking houses refused the job. The risk was too high. Nathan took the contract. He used the five-house network. Gold left London, moved through Amsterdam and Frankfurt, and reached Wellington's quartermasters in Brussels. The transfer succeeded. Wellington paid his troops. The army stayed cohesive. Nathan charged fees for the service. He also bought British government bonds at discounted wartime prices, betting on a British victory. If Wellington lost, the bonds would collapse. If Wellington won, bond prices would surge. Nathan placed the bet. June 18, 1815, the Battle of Waterloo. Napoleon's forces clashed with Wellington's British-Dutch army and Blücher's Prussian reinforcements. The battle raged all day. By evening, Napoleon's army broke. The French retreated. Napoleon's 100 days ended. Rothworth, Nathan's battlefield agent, rode to Ostend, crossed the Channel, and reached Nathan in London on the evening of June 20th. The official British government courier arrived in London the next morning, June 24th. Nathan had a 12-hour information edge. The legend says Nathan used the edge to manipulate the bond market. The story goes, Nathan appeared at the London Stock Exchange on the morning of June 20th, looking despondent. Traders assumed Wellington had lost. Nathan began selling bonds. Panic spread. Other traders sold. Bond prices crashed. Then, Nathan's agents secretly bought at the bottom. When the official news of Wellington's victory arrived on June 21st, bond prices soared. Nathan made millions. Ferguson's archival research complicates the legend. The Rothschild archive contains no evidence Nathan engaged in the sell-then-buy manipulation. The letters and ledgers suggest Nathan bought bonds immediately upon learning of Wellington's victory, before the public knew the outcome. He profited from the information edge, not from market manipulation. The distinction matters less than the structure. Whether Nathan manipulated prices or simply front-ran the market, he won because he knew before others knew. The Courier network, the battlefield agent, and the cross-channel logistics gave Nathan an insurmountable advantage. Waterloo cemented the Rothschild reputation. European governments noticed the family's ability to move gold across war zones, gather battlefield intelligence faster than state actors, and profit from geopolitical volatility. The Rothschilds became the indispensable financial intermediary. Post-Waterloo, the British government issued enormous bonds to pay down war debt. Nathan underwrote the bonds. He sold them to investors across Europe, taking underwriting fees and trading profits. The French government, now under the restored Bourbon monarchy, needed to pay war reparations to the Allied powers. James Rothschild in Paris arranged the loans. Austria, drained by decades of war, borrowed to stabilize its currency. Salomon Rothschild in Vienna provided the credit. The five-house network absorbed the entire post-war refinancing of Europe. Between 1818 and 1832, the Rothschilds underwrote sovereign bond issuances for Britain, France, Prussia, Austria, Russia, Naples, Belgium, and Brazil. No other institution possessed the capital base, geographic reach, or informational infrastructure to compete. Waterloo demonstrated the ultimate advantage of the Rothschild architecture. The family didn't need to start wars or control governments. They needed to position themselves as the payment infrastructure through which war-making occurred. Once positioned, extraction became automatic. Before the Rothschilds, sovereign debt was illiquid. Governments borrowed from domestic elites or foreign princes. Loans were bilateral, non-transferable, and opaque. The Rothschilds transformed sovereign debt into a tradable commodity. The innovation was bearer bonds. A bearer bond is a debt instrument where ownership transfers by physical possession. The bond certificate itself represents the claim. Whoever holds the certificate holds the right to interest payments and principal repayment. No registration, no central ledger, no intermediary required. Bearer bonds enabled secondary markets. An investor who bought a bond at issuance didn't need to hold it to maturity. The investor sold the bond to another buyer. The bond traded at prices reflecting credit risk, interest rates, and geopolitical conditions. Liquidity emerged. The Rothschilds pioneered large-scale bearer bond issuances. In 1818, the French government needed to borrow 315 million francs to pay war reparations. James Rothschild underwrote the loan as a bearer bond. The bonds sold to investors across Europe: British aristocrats, Dutch merchants, German princes, and Swiss bankers. The bonds traded on exchanges in Paris, London, Frankfurt, and Amsterdam. Prices fluctuated based on news of French political stability. The secondary market served multiple functions. First, it provided liquidity to initial investors, making sovereign bonds more attractive. Second, it enabled price discovery. Bond prices reflected the market's assessment of a government's creditworthiness. Third, it allowed the Rothschilds to trade bonds for profit. The family bought bonds when prices dipped due to temporary panic, then sold when prices recovered. The Rothschilds also innovated syndication. A single Rothschild house couldn't absorb an entire sovereign bond issuance. The amounts were too large. The family formed syndicates. Multiple investors joined together to buy the bonds at issuance, splitting the risk and the profit. The Rothschilds organized the syndicates, coordinated the capital, and distributed the bonds. They earned fees for the service. The 1820s saw a wave of sovereign bond issuances underwritten by the Rothschilds. Austria issued bonds to stabilize its currency after hyperinflation. Prussia borrowed to fund infrastructure. Russia issued bonds to finance its military. Spain and Portugal borrowed to suppress colonial rebellions in Latin America. Naples borrowed to rebuild after revolutions. Belgium, newly independent in 1830, issued bonds to establish its financial credibility. Every issuance followed the same structure. The government approached a Rothschild house. The Rothschilds assessed the government's creditworthiness. They proposed terms: interest rate, maturity date, underwriting fee. If the government agreed, the Rothschilds bought the bonds, formed a syndicate to distribute risk, and resold the bonds to investors. The bonds traded on secondary markets, providing liquidity and price signals. This structure standardized sovereign debt. Before the Rothschilds, every government loan was bespoke. Terms varied wildly. After the Rothschilds, sovereign bonds followed a template: bearer certificates, fixed coupon payments, standardized maturity structures, and secondary market trading. The template persists today. The Rothschild innovation extended beyond Europe. In the 1820s, Latin American countries fought for independence from Spain. The new republics needed loans to stabilize. The Rothschilds underwrote bonds for Brazil, Chile, and Peru. Many of these governments defaulted. The Rothschilds absorbed losses. They adjusted by demanding higher interest rates and collateral guarantees for future loans to emerging markets. The modern sovereign bond market operates on Rothschild-designed infrastructure. When the U.S. Treasury issues bonds, it follows the same process. Underwriters buy the bonds, form syndicates, distribute to investors, and the bonds trade on secondary markets. The terminology changed. The structure didn't. The Rothschilds also pioneered yield-based risk pricing. They charged higher interest rates to riskier borrowers. Austria, with chronic fiscal instability, paid higher yields than Britain with reliable tax revenue. The yield spread reflected default risk. Today's bond markets use the same logic. Greek bonds pay higher yields than German bonds. The risk premium compensates for default probability. The family's control over sovereign debt markets gave them influence over government policy. When a government wanted to borrow, it needed Rothschild approval. The Rothschilds imposed conditions: fiscal discipline, tax reforms, spending cuts. Governments complied to maintain credit access. The family didn't control policy directly. They controlled the financing required to implement policy. The distinction is semantic. By 1830, the Rothschilds were the gatekeepers of European sovereign credit. No government borrowed without their involvement. No major bond issuance occurred without their underwriting. The family stood at the choke point of state finance. The Rothschild five-house network collapsed in the 20th century. World War I destroyed the coordinated European state system the family relied on. Nationalizations in communist states seized Rothschild assets. The rise of central banks and government bond auctions displaced private underwriters. By 1950, the Rothschild banks were no longer the dominant force in global finance. The structural logic survived. Today's global systemically important banks, G-SIBs, operate on Rothschild principles. JP Morgan operates in 100 countries. HSBC spans Asia, Europe, and the Americas. BNP Paribas holds positions across continental Europe and beyond. These banks diversify geographically to hedge political risk. If one country collapses, the bank survives through positions elsewhere. The Rothschilds invented geographic diversification as a risk management strategy. Mayor Amschel placed 5 sons in 5 capitals to ensure the family couldn't be destroyed by any single sovereign. As collapse. Modern banks place subsidiaries in dozens of countries for the same reason. The informational edge persists in different form. High-frequency trading firms pay for faster data feeds. Investment banks employ analysts to interpret central bank statements milliseconds before competitors. Bloomberg terminals deliver news before public broadcasts. The technology changed. The advantage didn't. Speed equals profit. The sovereign debt market remains structurally Rothschildian. Governments issue bearer bonds, or their electronic equivalent. Primary dealers buy the bonds at auction. The dealers resell to investors. The bonds trade on secondary markets. Prices fluctuate based on creditworthiness. Yields reflect risk. The Rothschilds built this system between 1818 and 1830. It still runs. The neutrality model persists in defense contracting and infrastructure finance. Lockheed Martin sells weapons to the U.S., Israel, Turkey, and Saudi Arabia. The company profits regardless of which client fights whom. The World Bank finances projects in competing countries. Profitability doesn't depend on any particular geopolitical outcome. The Rothschilds also pioneered the too big to fail dynamic. In 1825, the Bank of England faced a liquidity crisis. British banks collapsed, panic spread. Nathan Rothschild intervened. He injected gold into the market, stabilizing the system. The British government survived. Nathan's intervention demonstrated the Rothschild network's systemic importance. The family became embedded in the state's survival. Modern central banks perform the same function. In 2008, the Federal Reserve bailed out banks to prevent systemic collapse. The banks were too big to fail. The Rothschilds were too big to fail in 1825. Systemic importance confers immunity. The family's political influence also persists in different form. The Rothschilds didn't hold formal government positions. They controlled the financing governments needed to operate. Today's bond markets exert the same influence. When Italy's government proposes deficit spending, bond yields spike. The bond market imposes discipline. Governments adjust policy to maintain credit access. The mechanism is Rothschildian. The Rothschilds also prefigured modern portfolio theory. Harry Markowitz won the Nobel Prize in 1990 for formalizing the mathematics of diversification. His insight, combining assets with low correlation, reduces overall risk. The Rothschilds practiced this empirically a century before Markowitz wrote his equations. By holding claims on Britain, France, Austria, Prussia, and Russia, the family ensured no single sovereign's default would destroy them. The five-house network's collapse offers lessons too. The structure depended on stable borders, coordinated elite interests, and the absence of total war. World War I broke all 3 conditions. Borders shifted. Elites were overthrown. Total war mobilized entire economies, making traditional finance irrelevant. The Rothschilds couldn't adapt fast enough. Modern G-SIBs face similar vulnerabilities. Their geographic diversification assumes nation-states remain the primary unit of political organization. If that assumption breaks, the banks face existential risk. Cryptocurrencies, decentralized finance, and central bank digital currencies threaten the intermediary role banks play. The threat mirrors what central banks and government bond auctions did to the Rothschilds in the 20th century. The Rothschild legacy isn't the family's current wealth, it's the institutional architecture they embedded into global finance. Sovereign bond markets, bearer instruments, secondary market liquidity, yield-based risk pricing, geographic diversification, and systemic indispensability all traced to the period 1810-1840, when five brothers coordinated across five capitals to control the financing of European states. You borrow money today through mechanisms the Rothschilds built. Your government issues bonds the way James Rothschild structured French debt in 1818. Your central bank intervenes in crises the way Nathan intervened in 1825. The technology evolved. The architecture persists. The Rothschilds didn't invent banking. They invented the global bank. They turned finance from a local service into a transnational infrastructure no state could bypass. They positioned themselves upstream of sovereignty itself. Money flowed through them before it reached kings. The lesson isn't admiration or condemnation. It's recognition. Power doesn't come from wealth. Power comes from controlling the systems through which wealth must flow. The Rothschilds built the system. We still live inside it.